Good afternoon, everyone. Welcome and thank you for joining us for Financial Check-ins with FAME. My name is Martha Johnston, and I'm the Director of Education at the Finance Authority of Maine. And we have lots of guests today that are helping us do this webinar. So first, I just want to introduce Mary Dyer, who is our Financial Education Programs Manager. We have Judy Shepard-Cagle, who is helping us today with ASL, American Sign Language Interpretation. So we're so grateful to have her here as part of our support team. We have Steve Kautz, who is our Financial Education Program Specialist. And then we also have a special guest. We have Addison Huber, who's from the Institute of Student Loan Advisors, and that is an organization that FAME works with very closely to provide additional student loan support for Mainers. So today for the webinar, I'm going to go through a lot of material about how to incorporate student loan repayment into your overall financial plan. But I do want to just remind people that your situations are quite personal to you. So we encourage you to use the Q&A. In fact, we probably have disabled the chat feature so that you can ask your questions and we will do our very best to answer them. If you have a very complicated, unique, or customized question, that might be something that we recommend that you work with TISLA, the Institute for Student Loan Advisors, on in particular. But definitely use the Q&A feature. We will monitor the Q&A, and to the extent there are questions that are just not very personal in nature, but very beneficial to answer on screen, we will do that. So we just want to make sure that you know we will be paying attention to that Q&A, and that's what this whole team is helping me do. So I'm grateful to have them. All right, so today we're going to talk a little bit about student loan in the news. I think we probably have student loan in the news fatigue. That's what we're hearing from our TISLA friends. I think we're all a little tired, but the fact of the matter is there's a lot of student loan information in the news. We're going to talk about the return on investment for education. I don't know if that's always a popular topic, but it's really important, and it's really important for us at FAME. We want to keep reminding people how important it is to pursue any education after high school. And part of that will be managing your student loan repayment. We'll talk about making a financial plan. And then we will talk about incorporating student loan repayment into that financial plan. So that's the order of show today, as my friend Betsy Mayat likes to say. I love that she says that instead of agenda. Sounds much more fun. All right, so I will tell you, I took these snips just last week. These are not old headlines, and there were a ton of headlines that I could have snipped and cut and paste into this presentation. But we know student loan debt affects people's ability to become homeowners. We know there's a lot of information about student loans in the news related to the Supreme Court, whether it was about debt forgiveness or the current SAVE plan. So we will talk about that. And then just to ground us all in the state of Maine, the average debt for a four-year graduate in Maine from the class of 2020 was about $32,700. So that was the average someone graduated with if they had a four-year degree, and 63% of those 2020 graduates did have some student loan debt. So this is a big topic for all of us. My children have student loan debt. They both graduated in 2021, and they're paying off their student loan debt. So I'm right there with you as a parent. We have student loans we took out on their behalf, and I'm helping them, luckily, because of what I do, with their own student loan repayment.
Martha, before you advance to the next slide, just to help Judy out, if you could just slow your pace just a little bit.
Okay,
and,
sure.
Just to let folks know, we may go over a little bit, but this webinar is being recorded and will be available. We'll actually send a link to it to all registrants. It will be available on the FAME YouTube channel. So if at any point you have to drop off and leave the webinar early, or if you have issues with your audio, we will make a recording available. So just a little reminder to all of you, and Martha as well. So thanks a bunch.
Thanks, Mary. Thanks for keeping me in line. It's good to know. All right. So education pays. I mean, I think you probably all know this. Sometimes it doesn't feel it, but I just wanted to talk about this. So the slide we're looking at here from the College Board just shows us that somebody with a bachelor's degree over their working lifetime, so from the time they're 18 until retirement age, say 64, that person is going to earn over their lifetime upwards of $1.2 million. You can see that's the orange line. The next line down, which is the dark blue, is someone with an associate's degree. Again, they're going to earn over $1 million during their working lifetime, 18 to age 64. Someone with even a little bit of education after high school is going to close in at around $1 million over their lifetime. And then someone with only a high school diploma will be at that bottom level. So this is not a judgment statement. It's just the reality that based on our economy and based on the workforce needs, having education after high school does pay. And it does pay in more ways than just salary. And so I think that's really important. And I wanted to make sure I shared that information with all of you. Some of that's really obvious. If you earn more, you pay more in taxes, and that does help the state of Maine. And you're more likely than someone who doesn't have advanced education to be employed. And we will look at unemployment numbers in just a minute. A typical four-year college graduate who enrolls at a traditional age of 18, if you will, and stops out of work for the 4 years it took them to earn that degree, will catch up with their high school only peer at age 34. So it does take them a little bit of time to catch up, but that period where they were investing in their education is called an opportunity cost. And so I think that's really important to realize. So the person with the bachelor's degree, they have a peer who only has a high school diploma. And by age 34, up until age 34, they're neck and neck with each other as far as earnings. But after age 34, that person with that education after high school will surpass their high school peer who only has the high school diploma. A college education reduces the chance that adults will rely on public assistance. Obviously, it's not 100%, but reduces the chance. Adults with higher levels of education are typically more active citizens and they're more likely to vote. And this is just all borne out by the data. And you can see any of this in the College Board Education Pays publication. It's a fabulous publication that they put together every year. People with a college education are more involved in their children's activities. I want to call this out. It's not because they love their children more. I think it's because they possibly have positions with more flexibility, and that allows them to have that type of engagement with their children's activities. And then having a college degree is associated with healthier lifestyles, less likely to smoke, exercise more, potentially reducing healthcare costs. But of course, the obvious thing is that if you're employed full-time, you have access to health insurance on top of it. So all of those things add to more benefits when you have education beyond high school than just an increase in your salary. And we do try to say, we go back and forth between the word college and education after high school because there's a whole continuum of the type of education people can pursue, whether it's trade school, community college, four-year degree, and none of those types of education should be discounted. They are all beneficial when it comes to thinking about the ways that education pays. As I mentioned before, you're less likely to be unemployed depending on your education after high school. So you can see in this chart, if you look at the very bottom line, 2022, and of course, we were still feeling a lot of the effects of the pandemic, but coming out from it, at least hopefully. Our person with a high school diploma had an unemployment rate of 4%. The person with some college, no degree, 3.6%. Someone who had an associate's degree was unemployed at a rate of 2.8%. And someone with a bachelor's degree or higher had an unemployment rate of 2.1%. So again, that does tie back to salary, of course, but you're less likely to be unemployed. So what does all this mean in terms of a return on investment? Well, this is a very rough calculation. So if there are finance majors listening to me right now, I just want to say to all of you, I was a philosophy major. So this is the back of the math. This is the back of the envelope math that I'm doing here. But if we think about out-of-pocket expenses for a four-year degree, the example I've put together is someone who spent $40,000 over 4 years on a payment plan. So maybe they did 10,000 a year in a payment plan to their college or university. Maybe they did 10,000 a year out of savings, whether that was from a 529 account, a traditional savings account. So let's pretend that 40,000 also included any interest they might have earned had they not spent it. Maybe they spent 10,000 a year on books and supplies and commuting expenses. And then we can't leave off student loans. That is an investment in education. And so we know someone with a 4-year degree in Maine graduates with about 32,700 in student loan debt. And when you pay that back over 10 years, it's not unreasonable to think with interest, you're going to pay back around $40,000. This example shows somebody having paid out of pocket $130,000 toward their education. Those amounts feel staggering. When we compare that to an income of 1.2 million over your working lifetime, you've got a return on investment of 823%. If you even spent more, let's say you spent 200,000 out of pocket, your return on investment is 500%. I really share all this because I don't want anyone to doubt that it was a good thing that they pursued their education after high school, but to just frame it as to all the positive things ahead of them. But I think I would be remiss if I just didn't acknowledge how come it doesn't feel like I'm benefiting from that return on investment. I was working with a group of young people, and I didn't like the term delayed gratification. I didn't think that was fair. I like the term delayed realization. They're not realizing it right away. And why is that? Well, there are a lot of competing financial demands on you or goals, whether it's your cost of housing, your cost of living, a vehicle expense, saving for an apartment or a house, saving for retirement. I was grilling my daughter last night. I said, how's your 403B? You're not touching anything, right? You're still saving. Saving for your emergency fund. We all have to have funds available in case something unplanned happens. And yes, having children is very expensive. It can feel that way. And then you want to save for their future education. And on top of all that, you might have your own student loan payment. So that's why I think people don't always feel the return on investment, and it can feel like a struggle. So what can you do? I think the lever, I like to call it pulling the lever in our control, is to increase our own financial wellness. And I get a little nervous when I talk about the basics of budgeting and financial wellness because I think everyone on this webinar has gone to school after high school. They already know how to budget. The fact of the matter is, I don't think everyone does know how to budget, myself included. And I will tell you, I'm someone who is definitely playing catch up on my own financial wellness because I wasn't always good at it when I was younger and when I was first married. So at Fame, we actually started an employee financial wellness program. Oh gosh, I think 6 years ago, Mary, 5 or 6 years ago. And it's phenomenal. Everyone thinks we're the finance authority. We're all experts. The fact of the matter is, so many of our employees really needed that employee financial wellness program. They value it, and it has made a difference in their lives. We even actually employed a researcher to do a white paper on the results of the first few years of our employee financial wellness program. That's a way for me to say, I don't take any of this for granted. I don't think we're all doing a budget, or if we did a budget, we might not be going back to revisit it with regularity to make sure we're altering it and modifying it as we need to. So the first thing Fame did, we work with a company called Enrich, and we purchase a financial wellness digital platform free for all of Maine. You can create a username and a password, and you can customize the content that you want to see around financial topics. You can do a financial wellness checkup. You can check your money personality. So what influences you when you make decisions around money? You can engage in monthly tasks, and they will make recommendations on the content that they think you might be interested in based on your financial wellness checkup. We do not sell your name. We do not share your name. You are not marketed to. You are not advertised to. This is all for Maine people to have access to financial education that will benefit them. Just checking my time. I want to make sure we're going okay. So budgeting 101, I will tell you the honest truth. I look at my budget every 2 weeks, and it's not because I want to. It's because I have to. I keep a very simple budget. I show what's coming in for my paycheck. I list the bills that I'm paying out of that paycheck. And then the second half of the month, I show what's coming in and I list the other bills coming out of that paycheck. I look at it every time I get paid. I make sure if there's anything extra at the end of that month that I'm setting it aside for whatever goal I'm trying to achieve. I'm sharing that with you because that's a big time element for me. I actually look at my budget in 6-month increments and I set my goals. And so you'll see with the budgeting 101, you want to have a very measurable time element. So what is your goal after a reasonable amount of time? And so you don't want to say like in 10 years, I want to have X. That's great. But what about in 3 months? I want to have achieved this. So how much do you plan to have saved after X number of months? Or how much debt do you plan to have paid down after X number of months? What are some very specific actionable tactics that you can do to further your financial goal? And again, I'll give you an example from my real life. So at Fame, we get paid every other week. So that means we get 26 paychecks a year, which means there are 2 months out of the year that we get an extra paycheck. And so I earmark that extra paycheck for a goal that I'm trying to accomplish within my budget, whether I'm trying to increase my emergency savings, whether I'm trying to pay down credit card debt, or honestly, whether or not I'd like to save for something special or maybe a home repair. So I know that money is not just going to fly into my banking account. I'm actually going to do something with it right away. I'm going to move it to an investment account. I'm going to move it to a savings account. I'm going to move it to a debt, whatever that is. So I have a very specific actionable item in addition to monitoring how I pay my bills with every paycheck. I think it has to be realistic when you do your budget. So obviously based on your income, not based on what you hope, but based on what's the reality. And then you do have to give yourself a reasonable amount of time. And I think that shorter goals in a shorter time periods for your goals will help create a positive sense of achievement and accomplishment so that you don't get discouraged. So that's a really important part of the basics in your budgeting. Consider all your expenses, no matter how small. I always get tripped up by Apple storage. I think I pay an Apple storage fee every month and I always forget it. So now that's in my budget because I tripped over it a couple times, of course. Compare your monthly expenses to your monthly income. If your expenses are greater than your income, then you know what you've got to do. You either have to trim those expenses or you have to increase that income, whether it's with a side hustle or a part-time job. Or a new job. I hope not. I hope you love where you work and that you can make it work by examining your expenses. But really, those are the 2 ways to go. And then I think the most important thing is to monitor and adjust your budget as necessary. And I am not, like I said, I am not a numbers person. I do not love looking at my budget, but it keeps it top of mind for me every other week. It keeps me focused on my short-term goals and my long-term goals. And I do try to really pay close attention to the things that are within my control. You know, is there a way that I can change my grocery bill and make that a more affordable expense? Can I regularly shop my fixed expenses like my cell phone, my insurance, my streaming? What can we do? I will tell you, we were a family that took a long time to cut the cord with cable. Our 27-year-old son was after us for years and said, I can't believe how much you spend on cable. You do not have to do that. So we did finally cut the cord in January, and we are now a streaming household, and we are a household that's saving a lot more money because we did that. I think you have to budget to fit your lifestyle. So don't budget to make yourself miserable. Think of this as a nutrition plan, not as a restrictive diet. And then I think when you do examine your budget, think about the debts you want to pay off or the savings goals you want to achieve. And then last but not least, I do think you should plan for overspending. I have one child who, when he opens his wallet, moths fly out, literally. He does not like to spend a dime. I don't think that's healthy. And then I have another child, and money runs through her hands like water through a sieve. And so I'm constantly telling her it's okay to impulse shop as long as you've planned for it. You've built it into your budget. It's a little bit of a slush fund and it's limited to what you can afford. So it's okay to plan to overspend because, again, it's not a restrictive diet. If you make it so restrictive, you're not going to stick to it. So what about practicing self-discipline? What are the tricks that you can employ? Well, some are make sure you go out with cash instead of a debit card. And when you run out of cash, you're done for the night. Tell your friends that you're trying to live on a budget. I bet you'll find that they're trying to live on a budget too, and that they have financial goals they're trying to achieve. I didn't put this in the presentation, but if you would Google loud budgeting, I think that is the most interesting concept. There was I think it was a TikToker, but we don't do TikTok in the state of Maine. So you'll have to do it on your personal device. But the person really became quite famous for going viral about loud budgeting. Like, no, I'm not going to do that because I would not choose to spend my money that way. And I thought that was a really interesting concept. So we don't want to hurt anyone's feelings through loud budgeting, but I think we shouldn't be so afraid to talk about money with our peers or with our family, because you'll find that, I used to think everyone was better off than me, and I was the only one that was really messing up my cash flow. And I'm finding that we're all working as hard as we can just to make it work for us. The other thing I think is once you commit, it will become easier. I do look at it, like I said, I look at my budget every 2 weeks when I get paid. I know it sounds a little crazy, but it helps. It really helps. I am more aware of saving opportunities and looking for free entertainment type things to do. Certainly cook more at home than we used to before I became very aware of my budget and wanting to do a little catch up on my retirement savings. And honestly, it makes me feel very good about myself, and I feel very empowered when I'm in control of my spending. And I just can't say it more plainly. That's the truth. If you do choose to create a username and password and start using the Enrich tool, they have a fabulous budget worksheet that you can download. So this is just a little screen caption that I took so you could see it. Now, I think this is very intricate, and I think there are people that will absolutely love this. I happen to do something very basic with an Excel spreadsheet because for me, it has to be clear and simple and something that doesn't overwhelm me. So I think you find the tool that works best for your personality, but just know there are a ton of tools available on Enrich. So what about making debt reduction part of your budget goal? Well, there are really two philosophies around how to approach paying off your debt. One is called the debt avalanche, and one is called debt snowball. So debt avalanche means that you prioritize paying down the debt you have with the highest interest rate. And the avalanche effect, of course, is that as you pay down those higher interest rate debts, then you're paying back less interest over time. So you've kind of created an avalanche of savings, if you will. The debt snowball prioritizes balances. So you pay off your smallest balance first, then you move on to your next biggest balance. And many people, when they snowball their debt payment, what they do is what they were paying on that smallest debt, maybe they were also paying a little bit on the next biggest debt, they snowball those two payments together and now make a bigger payment on the next debt they're trying to pay down. So they're snowballing their payment. But the reason people will do the debt snowball is because it builds motivation because they're settling their debts faster. And I wouldn't say that one is better than the other. Obviously, you can do the math. One might save you more money than the other, but I would do the one that's going to motivate you and inspire you and help you stay on track to keep doing it. So debt avalanche, debt snowball. So now to the good stuff. What about student loan repayment? Well, I'm going to tell you, if you did not attend our financial check-in with Fame webinar from August 2nd, you need to. So we had Betsy Mayotte, who is the CEO of the Institute of Student Loan Advisors, as our presenter, and she presented on what you need to know about the latest information related to your federal student loans. Even though things are changing all the time, even though there's new headlines every day, I have listened to Betsy's webinar at least twice. It is still actually, it's not out of date. And that's not a statement about Betsy. That's a statement about how fast things are changing. So it still has its shelf life. It's still timely. I would take the time to go back and listen to it. Certainly you can watch it, but it was not a bad one to listen to as well, as far as being able to take in the content. It just depends. I think I did it while I was walking because that was easy for me to do. I could multitask, but go back and watch it as well. Great slides, great information, and everything you're seeing on this slide about how all the different repayment plans for student loans. Betsy does it 10 times over, and it's wonderful. So every item on this play of show today, I could do a whole webinar on. So I just want to make sure that we touch on this, but we're going to jump to more information about student loans. And just a reminder, student loan repayment, your federal student loans are based either on the amount of debt that you have, so a set monthly payment to get you paid off within a set time period. That's on the left-hand side of the slide. Or you'll have a payment that's based on your income. And very generically, we call those plans income-driven repayment plans. So every type of federal student loan is eligible for the standard repayment plans based on debt and term, but not every loan is eligible for every type of income-driven repayment plan. There are different criteria depending on what type of federal loan you have or when you first became a borrower. You do not have to commit any of that to memory, and I will tell you why. If you go into studentaid.gov and you use the loan simulator tool, it will help you calculate the best repayment plan for you to consider based on your situation and what you're trying to accomplish. So the loan simulator tool is really the best way to determine the best payment plan for your situation and your goals. But you say there's one small problem. I don't have a student loan payment due right now, and here's why. If any of you are in the SAVE plan, that is the plan that you're hearing about in the news. So there was a federal court issued injunction to stop the U.S. Department of Education from implementing parts of the SAVE plan. And SAVE stands for Saving on a Valuable Education. But it did also have the effect of stopping other parts of other income-driven repayment plans. So what's happening right now, the Department of Education has asked student loan servicers to pause collecting any student loan payments from these payment plans, and your loans have been placed into something called an administrative forbearance. Now remember, there are millions of you. Some of you might not yet be in that forbearance, but it will happen, especially if you're in the SAVE plan. If you're in a regular standard repayment plan, I think you're experiencing just your normal student loan repayment. This is only impacting people in the SAVE plan or some other of the income-driven repayment plans. So that administrative forbearance is currently happening. I can tell you firsthand that is the case for both of my children. They were both in the SAVE plan. They both are in an administrative forbearance. There is no interest being calculated while they are in that forbearance. If you do see interest accruing, it should be backed off by your loan servicer. So again, it's going to take a little bit of time. There's millions of records that they're doing this for. So you don't have a payment due. How can I possibly make a plan about paying my student loans if I don't have a payment due? Well, the first thing I would say is whatever your student loan payment was before the administrative forbearance, I would continue to make that payment into some type of savings account. So some account that you don't touch, basically. That way it stays as part of your budget and you're not tempted to see it as available to be used to pay other expenses or to pursue some other wants. It will help you set aside a lump sum that you can put down on the outstanding principal once your loans do go back into repayment. And remember, we're waiting for a lot of this court action to settle or for the Department of Education to make a plan that doesn't violate the court order. So that's what this is all about. They're trying to figure out what they can do and what they should do. The other thing that happens when you put your student loan payments into an account, even though you're not making them to your servicer, you're having the money available for something called a buyback. So the most important thing for many of you who are joining us today, I know we have a lot of state of Maine employees on this webinar. If you are pursuing public service loan forgiveness, your forbearance period right now, even though you didn't ask for it and it's an administrative forbearance, this does not count as an eligible payment towards your 120 payments that you're trying to hit for public service loan forgiveness. Buyback allows you to make those payments retroactively at the time you're ready to get forgiveness. So you can't do buyback until you hit 120 months of eligible employment. So you want to get all your employer certifications done and you want to see that 120, and then you can do buyback. So for those of you that were feeling a little panicked, during this administrative forbearance and that it wasn't going to count, it is more important than ever to have a plan to keep making that student loan payment in a separate account that you will not touch so that you have it available for buyback. I will reference Betsy's webinar again from August 2nd. She talks about buyback and the impact. So it is worth your time to listen to that webinar. So what else can you do to accelerate your student loan repayment? Well, obviously you can target your student loans as a budget goal using either the avalanche or the snowball method. You could make a commitment that anytime you have found money that you put it on your student loan debt. And by found money, it could be when I tell you we've got those 26 paychecks and I have 2 extra in a month. It could be that you get a work bonus. It could be that you get a tax refund. So found money, be very aware of found money. Your employer, does your employer offer a benefit to help pay down your student loans? Right now, they can offer up to $5,250 annually. That's non-taxable to the employee. They're not obligated to offer that, but if they do, it's not taxable to you, so that's great. So check with your HR office or check with your benefits guide if they publish one on your intranet. Gift of college. A lot of people have heard of gift of college because we actually use it to help encourage families to have other family members contribute to their 529 college savings account using gift of college. You can actually use gift of college to help people make contributions to your student loan payoff. So that might feel uncomfortable. You might say, well, I don't want to ask people to help pay down my student loans. But, if you get a gift every year from mom or dad still, or they could put a gift on your student loan account. So just something to consider. It would be meaningful to you because it's an important goal that you're trying to achieve. And then I do like to talk about the small things. I think, and I get caught up in this trap, I think, which is, oh, it's not enough to matter. Well, I think that's probably the mindset that got me where I need to play catch up, because I think if every little bit helps was my philosophy, I'd be a little further ahead and I wouldn't be playing catch up. So when you think about something as small as an interest rate reduction using ACH, here's an example of a loan, $32,000, 4.5% interest, monthly payment of $337. Sign up for ACH. Now you're paying 4.25% and you're saving $4 a month. $4 a month doesn't sound like a lot, but what if you were to invest that $4 a month over 10 years. And if you got 4% as a rate of return, then the $470 would turn into $589. Every little bit helps. What if you happen to have $470 sitting around and you're like, okay, psychologically, I'm going to save that over the life of my student loan because now I'm paying lower interest. I'm going to invest all of that 470 upfront, and with compounding interest at 4%, I've turned it into $699. Every little bit helps. So I think you can make your own found money, not just wait for it to happen to you. So just keep that in mind. You can also use education tax benefits to help accelerate your student loan repayment. So if you're not aware, Maine has one of the most generous tax credit programs that supports student loan repayment. And I would say one of the most generous in the nation. I probably shouldn't go out on a limb and say it is the most generous, but let's just say it's pretty generous and it gets talked about a lot. So it was also known as Opportunity Maine. It reimburses up to $2,500 a year via the tax credit for student loan payments for college graduates who live and work in Maine. There is a lifetime maximum of $25,000. The wonderful thing is that it applies to all education loans, not just federal student loans. So that's good if you have private student loans. And you apply every year that you file your Maine taxes. And you can learn more at Live and Work in Maine. So that is a really phenomenal opportunity. There's also a federal tax student loan interest deduction, and that's up to $2,500 a year. And again, that's not just for federal student loans. You can also use that for private education loans. So that's a deduction based on your interest. I'm going to pause here and say, I do not assume that everyone knows the difference between a tax credit and a tax deduction, and I am not a tax expert, but here's what's important to know. A tax deduction helps reduce your taxable income. So if you have $30,000 of taxable income and you take a $2,500 deduction, then your taxable income has dropped to $27,500. If you have a tax credit, that reduces your tax obligation dollar for dollar. And that's why it's considered a very rich benefit. So if I owe $5,000 in taxes and I have a $2,500 tax credit, I now only owe $2,500 in taxes. So a tax credit is considered a very rich benefit because it's a dollar for dollar reduction in your tax obligation. But don't turn your nose up at those tax deductions because those are important too. Anything we can do to help reduce our tax obligation can help keep money in your budget to accelerate your student loan repayment. So that's how I want you to think of it. There are some other ways you could accelerate repayment by entering into student loan repayment programs. So you might actually find yourself working in a field that's in high demand in certain areas of the state, say in rural areas of the state. So you could have a federal, state, or philanthropic organization make payments for you to your student loan in exchange for a work service commitment. Some of the most obvious ones are healthcare workers will often do this. We have a state student loan repayment program. National Health Service Corps is similar. So those opportunities do exist depending on who you are as a worker. Now, I don't want that to be mixed up with loan forgiveness programs. So loan forgiveness programs are a little different. Loan forgiveness programs are saying, here's a student loan that you can take from us while you're pursuing your education. And if you provide return service on the back end, then each year of your qualifying service, a portion of your loan will be forgiven. So that's kind of the difference. Forgiveness, up front, you have that opportunity to get the loan forgiven when you're taking it. Loan repayment, you took your student loans, that's fine, but now you're looking for an opportunity and you found the student loan repayment program that would help you pay off those loans. So again, those opportunities are out there, especially for healthcare workers. We've had some that we've done for STEM workers. But certainly if you ever have questions about that, you can contact us at FAME. You see me look down once in a while, I'm still checking what time it is. I want to make sure I'm doing okay with time, I promise. So public service loan forgiveness. So many of you on this webinar are from the state of Maine, and you are probably pursuing public service loan forgiveness. So this is a reminder. Public service loan forgiveness is only available for federal direct loans, including a direct consolidation loan, and your loans are forgiven after you make 120 qualifying education loan payments in a qualifying repayment plan, and that means an income-driven repayment plan, while working for a qualifying employer. So all three of those things have to happen at the same time. Qualifying employment is who your employer is, not the specific job you do. So I could be working in HR at Maine Health. Maine Health is a nonprofit. Therefore, my service at Maine Health is eligible for public service loan forgiveness. Other types of employers that qualify, state of Maine, so federal, state, local, and tribal governments, 501c3s, other nonprofits, if they have qualifying public service that they provide, and then AmeriCorps and Peace Corps. I will tell you, my daughter currently works at the Boston University School of Medicine. It is a 501c3. So all of these months that she's been working for them, which is 24 months, are going in the bank toward her 120 payments as she pursues public service loan forgiveness. Now, don't forget, she's also in a forbearance right now, which means her payments aren't being made and they don't qualify toward PSLF. So she's putting money aside to do buyback in the future. So what loans qualify? Well, federal direct loans only. And the one thing I want to make sure I point out, if you are a parent who took a direct Parent Plus loan, you could qualify for public service loan forgiveness, but it is for your public service work, not the student for whom you borrowed the loan originally. So I think that's an important distinction. If you are a parent and you borrowed for your son or daughter's education and you happen to work for the state of Maine, you could qualify for public service loan forgiveness of that plus loan. So hopefully that makes sense. If you have older loans, federal family education loans or Perkins loans, you would need to consolidate them into a direct consolidation loan first before they could qualify. But the time period for the 120 months will start from the time that you consolidated. That's a go forward statement. We are just coming out of a very interesting waiver period that the Biden administration did that allowed other types of payments to count. That was a very good thing. And so there are many of you who may be qualified for that. Well, actually everyone got looked at. It's called the one-time payment count adjustment. That happened. So, or is still happening. But on a go forward, if you consolidate, your 120 starts from the time of your consolidation. So that might be one of those situations where you have a very specific question that you ask the TISLA team, and that's great. And you can always reach out to FAME as well. And then qualifying payments made after October 2007 when the program started, payments made while in school, during grace or deferment don't count. Remember, certain periods of forbearance you could do a buyback for, but don't assume that all past forbearances would qualify. Certainly the administrative forbearance happening right now would qualify. And 120 on-time payments, and they don't have to be consecutive. So that basically means you graduated, you spent 2 years in a nonprofit, you went to a for-profit for 3 years, you didn't like the for-profit world, you went back to the nonprofit. You can kind of pick up where you left off. You still have 2 years in the bank, and then you can move forward to earn the rest of your 120. So they don't have to be consecutive. And you've heard me say a number of times, you do have to be in an income-driven repayment plan. I'd say the best thing you can do if you have not yet started to consider public service loan forgiveness is to go into studentaid.gov. So you have an FSA ID and password. Use the PSLF help tool to learn about it, to see if you are with a qualifying employer, and then learn the steps that you need to take to do your annual employment certification. Make sure you're in the right repayment plan. You have to be in an income-driven repayment plan. It's a very good help tool. The form is easy. It's a very easy guided process. And I did do it both for my son. He worked at Maine Health for a while. He doesn't work in nonprofit anymore. So he'll change pretty soon. And I did do it for my daughter. So it's pretty intuitive, and we help people all the time at FAME navigate that process. And certainly every student loan is unique, and there's a big picture, but the big picture is based on you, right? It's all the considerations you need to consider based on your situation, your overall debt, your overall income, your budget. Do you pay off your loans? Do you invest? Do you try to find a way to do both? Do you refinance private student loans so that you can get a lower interest rate or have a more manageable monthly payment because your cash flow is really feeling crunched? Politics and student loans is just a reality right now. I wish it wasn't, but I think you do need to follow politics in a way that maybe you haven't before as it relates to student loans. And I think that's what we're all doing as we watch what happens with the SAVE plan and any future court action related to that. And then certainly, last but not least, bankruptcy and student loans. It's generally a very well-known concept that student loans aren't dischargeable in bankruptcy. There are some situations, and they are very rare situations, where they can be discharged in bankruptcy. And so if you have that type of situation, you want to look into that. Maybe you are someone that falls into that sliver of eligibility for a bankruptcy discharge, but it's very, very rare. So I want to make sure you know that. And only because I said it a million times today, but here is the screenshot. That's our own Mary Dyer in the corner. But this is the opening screenshot of the YouTube video from Betsy's webinar that was just done on August 2nd. Again, great information. It ran over a little over an hour, so it is an investment of time, but it will give you the latest information on federal student loans and all the different things you're seeing in the news related to forgiveness. So I think it is worth your time to kind of get caught up to speed. And then certainly as things change, as new developments unfold, we work very closely with TISLA. We will do whatever we need to do, update our website, send out notifications, have an ad hoc webinar if we need to, because there's just too much information and we can't wait. Modify our financial check-in schedule to do a special Betsy webinar because something really new was breaking on the student loan front. So we're going to do everything in our power to keep you informed about what's happening with federal student loans. And then certainly, last but not least, we really are here to help support your student loan repayment. Obviously, you heard me spend a lot of time talking about financial wellness in general. I talked a lot about Enrich. We actually also work with a company called ECMC, and they do proactive student loan counseling for new borrowers who are just graduating. And that's with certain partner schools in Maine who have chosen to pursue those services in partnership with us, with ECMC. And then the Institute for Student Loan Advisors, freestudentloanadvice.org. That's Betsy's website. It's phenomenal. And then we have just recently entered into an agreement with Betsy's organization to have a specific FAME email for Maine borrowers to get their questions answered about their student loans. So basically to seek student loan counseling. Now, it is not legal advice, and TISLA is very clear on that, but it is wonderful, phenomenal student loan advice. Betsy is a national treasure. I don't say that lightly. She has been in the student loan industry and specifically in compliance and with servicers for many, many years. And so her expertise and knowledge is really unparalleled. So FAME at freestudentloanadvice.org is specifically for Mainers to get student loan counseling directly from TISLA. And so that's the end of today's presentation, but I do want to see if there were any questions that came through the Q&A that you want to address, or maybe Addison will help us address because we have a TISLA expert here today.
So Martha, Addison has been a busy, busy man today. We've had 50 questions,
Oh my God.
which he answered the bulk of. So certainly we've covered all of the questions that have been asked. To get into any of them specifically, you know, a lot of them had to do with questions around individual eligibility for PSLF and those sorts of things. So I just would encourage viewers that if you have additional questions about repayment plans or PSLF for you specifically, I would absolutely reach out to Betsy at the FAME at freestudentloanadvice.org and get those questions answered. So I'm not going to continue and go through all of the questions, but a lot of them had to do with that. And as I said, Addison has been amazing in getting those questions answered. But as always, there's more help available. One thing I just wanted to let folks know, I don't recall exactly what you said at the beginning of the webinar, Martha, because I was getting things set up. But just want folks to know that this webinar series, the financial check-ins with FAME, is part of a regular ongoing series that we offer on the first Friday of every month at noon. And so just want you to be aware of that. We host a variety of topics. This month it's student loans. Next month on October 4th at noon, Steve Kautz, our financial education programs specialist, will be doing an in-depth session on budgeting and emergency funds. And then in November, we'll be doing a session that is helping people to understand the differences between the Alphon grant and Next Gen 529. So all of these sessions are recorded. They're made available on FAME's YouTube channel, and we're always looking for feedback on additional topics. So just wanted to put a plug in for those two upcoming webinars and just thank you all for being here and for providing such great questions and for staying on with us for the last hour. So any last words, Martha, that we're going to stay on for a few minutes and eventually stop the recording and let Addison finish up with questions, but just want to thank you all for being here.
Yeah, so I think the only other thing I didn't mention today that might be a topic for some people, if they've heard of double consolidation for Parent Plus loans, that's another opportunity to go back to the August 2nd webinar and watch the recording. Betsy did a great job talking about double consolidation for Parent Plus loans. And we have helped quite a few people with Plus loans do double consolidation. It basically, Betsy describes it as making sure there's two blankets over all your Plus loans. And when you put those two blankets over them, they now become available to have access to more income-driven repayment plans, not just one income-driven repayment plan. So it's a little bit of insider baseball. TISLA does a great job on their website, being very detailed about how you have to pursue double consolidation. FAME staff has helped people do it. But I highly recommend going back to the August 2nd webinar and give it a watch because there's great information there. Right. I really want to thank everyone for sticking with us. Thank you, Judy, for being our interpreter. That was so phenomenal. Thank you, because it did cause my pace to slow down, but I hope it was slow enough. So that's a good presentation skill to develop, is a better pace. And thank you, Mary, Steve, and Addison, for really being part of a team today to make today's webinar happen.